Welcome to The Explainer. Today, we're unpacking the physical and financial reality of an absolute powerhouse in the utility sector. We'll be looking directly at Duke Energy's Q1 2026 performance and their historic capital plan. And we're pulling all our insights straight from the company's recent financial releases and industry reports. All right, let's dive right into this.
$103 billion. Let that number sink in for a second. Duke Energy just added another $16 billion to their 5-year capital plan to reach this absolutely staggering figure. To put that into perspective for you, that is roughly equivalent to the entire gross domestic product of some whole countries. It makes this the largest spending plan currently on file at any regulated utility in the United States. It is a massive, historic commitment, and today we're going to explore exactly why they're spending it and how they actually plan to pull it off.
Here's our roadmap for today. We'll hit the Q1 2026 financial highlights, map out their power generation portfolio, look at the surging grid demand, break down that $103 billion capital plan, and wrap up with the investor value proposition. Let's get started. Section 1. Q1 2026 Financial Highlights. A baseline of growth. So Q1 2026 was a really strong quarter, characterized by some serious double-digit growth. Total operating revenues jumped from $8.25 billion in Q1 of 2025 up to $9.18 billion this quarter, which was largely driven by higher regulated revenues and some favorable weather. Now looking at the earnings per share, reported EPS climbed from 176 to 197, but notice that adjusted EPS of 193, that little 4-cent difference between the reported and the adjusted EPS, that's just due to a few special items, mostly legal settlement charges, which were offset by some pretty significant gains on asset sales, like closing out their Tennessee gas sale.
And this brilliantly illustrates a clear dynamic when we split the business into its two main regulated segments. Both of them grew nicely, but the electric side definitely carries the bulk of the financial weight here. Electric utilities and infrastructure delivered $1,404 million in adjusted segment income, while gas utilities and infrastructure produced $361 million. It's a great reminder that, while natural gas is a vital piece of the puzzle, Duke is fundamentally an electric-first powerhouse.
Section 2. The Power Generation Portfolio. The Physical Reality.
Let's step away from the spreadsheets for a second and think about the physical reality behind those numbers. Colossal assets like their nuclear facilities are the true anchors of Duke's entire system. They provide incredibly reliable baseload power, meaning that continuous, round-the-clock energy that's required to keep regions like the Carolinas running without a single interruption. It is an immense, highly regulated physical footprint that requires constant, everyday maintenance and real strategic foresight to just keep humming along.
Collectively, Duke owns a whopping 55,700 megawatts of energy capacity. That mix includes over 7,400 megawatts of nuclear, over 11,000 megawatts of fossil, so we're talking coal and natural gas intermediate facilities, and nearly 3,500 megawatts of hydroelectric power. And on top of all that traditional baseload, they're aggressively adding renewable assets into the mix, like utility-scale solar and battery storage. It's a highly diverse, complex energy mix designed to ensure rock-solid reliability across multiple states.
But hey, generating all that power? That's really only half the battle. You actually have to deliver it. Extensive transmission networks are absolutely crucial to move electricity across Duke's territories in the Southeast and the Midwest. And right now, those lines are being asked to deliver more power than literally ever before. Which brings us right to our next topic.
Section 3. Surging Grid Demand. The Data Center Boom.
Since November of 2025 alone, Duke Energy has signed 1.5 gigawatts of new data center customers, but their pipeline for potential deals has now topped 9 gigawatts. So the crucial point is really understanding the sheer scale of this jump. Just for some context, a single gigawatt can roughly power 750,000 homes. So we are talking about an astronomical amount of energy. Driven by artificial intelligence and advanced manufacturing, this whole tech boom is creating totally unprecedented demand for massive, reliable power.
Section 4. The $103 billion capital plan. Building for growth.
Duke Energy's CEO, Harry Sideris, really hit the nail on the head during the earnings call. He stated, "Providing the reliable power our customers expect requires us to add every available megawatt to the grid and increase speed to power as we build for economic growth." You can really hear the sense of urgency there, right? They aren't just doing routine maintenance on the grid. They are in a dead sprint to expand capacity to meet this historic population and economic growth in their territories.
So what does $103 billion actually buy you? Well, here's the game plan for the next 5 years.
Duke plans to add an incredible 14 gigawatts of new generation and deploy 4.5 gigawatts of battery storage. In fact, they actually just completed their largest battery installation yet, a 100 megawatt site down in North Carolina, and they broke ground on 5 gigawatts of new natural gas in the Carolinas and Indiana. They've even filed an initial site permit for a small modular nuclear reactor. Now, to fund this kind of rapid expansion, management noted they're going to need to issue about $10 billion in new equity between 2027 and 2030, all while exploring some other financing options.
Section 5. The Investor Value Proposition. Growth meets stability.
Now, despite this massive, rapid expansion we just talked about, it is vital to remember Duke Energy's fundamental nature. They trade on the New York Stock Exchange as a heavily regulated, pure-play utility stock. Investors typically flock to this sector not for wild, tech-like volatility, but for stability, for predictable returns, and for constructive, steady relationships with state regulators.
And that exact stability is what management is projecting right now. Duke Energy reaffirmed its 2026 adjusted EPS guidance range of $6.55 to $6.80. But more importantly, they reaffirmed their long-term adjusted EPS growth rate of 5% to 7% through 2030. They even expressed confidence that they'll be earning in the top half of that range starting in 2028. The message from the top is clear. They firmly believe they can manage these heavy capital expenditures without sacrificing steady, compounding earnings growth.
Now, what's really interesting here is the sheer historical weight behind these financial projections. 100 years. 2026 marks exactly 100 consecutive years of Duke Energy paying quarterly cash dividends. We are talking about a full century of payouts through wars, recessions, and completely shifting energy paradigms. It really underscores the incredible longevity and the defensive appeal they offer to their shareholders.
Which really leaves us with the defining tension of this entire explainer. As they race to meet the AI and data center boom, can Duke Energy successfully balance a massive $103 billion grid expansion with its core promise to keep customer rates low and maintain reliable shareholder stability? It is going to be a monumental tightrope walk over the next 5 years, and it'll be absolutely fascinating to watch it all unfold. Thank you so much for learning with me today, and I can't wait to explore our next topic with you soon.